Good morning, folks. This is Nick Randall with Western Marketing, just right after the top of the hour here, and want to thank everybody for taking time out of their schedules here to join us for a very important webinar. So we've got Daniel Trudeau, who is our external with SILAC Insurance Company, formerly known as Equitable Insurance Company. They've got some very compelling annuity products that we're going to go over. We're going to kind of do a high-level overview and then kind of go into a deeper dive into the index options. So certainly, I think this will be very good information for you folks. They are a leader in the FIA space. We have had a long partnership with Equitable and SILAC. Definitely enjoy working with the folks, and they have been tremendously helpful in helping us launch this with everybody here. So this should last probably about 40-45 minutes or so. Within GoToWebinar, you can ask any questions. We will address those at the end, and certainly have everybody on the call. In addition, this afternoon, I will be sending out some more detailed information, a recording of the webinar, more information on SILAC, and certainly contracting, so on and so forth. So the basic information that you need to know. And then, as always, you can always give us a call with any questions you have after the webinar, if something comes up later on, need an illustration, whatever it may be. But I'll hand things over to Danielle to get things started.
Awesome. Thanks, Nick. And thank you to everybody on the call for joining this morning. Really excited to be able to talk with you guys about some of our products. We've got a lot to get through here this morning, so I want to go ahead and kick off here and get started. So really our agenda here today, for those of you who aren't super familiar with SILAC or Equitable, just want to tell you just a little bit about who we are. Then we're going to do a quick overview of our Teton product line, do a quick overview of our Denali product line, and then, as Nick mentioned, we'll dive a little bit deeper into the Atlas Index, how it kind of works, and the performance that we've seen over the last 10 years, and then some resources for all of you that we have available on our agent portal. So really quickly, a little bit about our history. So we are actually Utah's oldest active life insurance company, and we started doing business all the way back in 1935. So I like to point this out because we may be fairly new to the indexed annuity space. Yes, this is true, but we are not a new life insurance company. We were acquired by SILAC in 2017 and really shifted our focus from life insurance to asset accumulation products. In 2018, we started with the index annuity side and introduced our secure savings MYGA line. And then in 2019, we released our Teton line as well as Atlas. And then in 2020, as many of you know, we launched our Denali series and of course became SILAC Insurance Company. And I just want to point out that this was not a financial decision. We weren't acquired by any other companies. We simply just rebranded to have better recognition in the industry. So with that, let's kick it off and talk a little bit about Teton. So indexed annuities were really built for one thing, as we all know, right? And that's the accumulation, but without that downside risk. So that's exactly what we did here with Teton. We didn't overcomplicate anything or add any of those extra confusing features. We truthfully built an accumulation product with that clean and simple structure. So we have a 7-year, a 10-year, and a 14-year version. There's a bonus and non-bonus version as well. Love to point out the 7-year has the premium bonus that can be written all the way up to age 90. And then we have a 5%, 7%, and 10% premium bonus. One great thing about Teton, and I always want to make sure that I point this out when talking about the Teton series. A big thing is every year you have your liquidity, right? So you can take out either RMDs or 5% of that account value. But what we found is when we look at policyholder behavior, a lot of times people will just let their annuity sit. They don't have a need to take anything out. But what you can do with the Teton line is you can take that 5% and carry it over to the next year cumulative up to 30%. So now all of a sudden, Teton for the right client can be a very, very liquid product. Because we find, again, like I said, that a lot of times customers will want to take out a large sum at a certain point. So that's a great feature that we can do with Teton, is carry over that 5% up to 30. Now here are the basics for Teton and Teton bonus. So no minimum issue age on any of these products. Maximum issue age, as I pointed out on the 7 and bonus 7, is 90. Teton 10 and bonus 10 can be written all the way up to age 85. And Teton 14 and bonus 14 can be written all the way up to age 80. So the minimum premium we allow here is $10,000. And the cool thing is with Teton, we do allow additional premium within the first 12 months. And that minimum additional premium amount is $2,000. And the maximum total premium is $1 million. However, I do want to make sure I point out we accept larger cases every single day. All you need to do is go on to our agent portal, fill out that annuity large case approval form, and get that sent into us, and we will approve or deny it based on the suitability of that client. So here are our current rates for Teton. So this is the non-bonus version. We have, of course, here the fixed crediting strategy, or fixed strategy, excuse me. And then we have 6 crediting strategies that are tied here to the S&P and 2 that are tied to our global index, the Barclays Atlas 5, which we'll talk about a little bit more in detail here soon. Now here's Teton bonus. So now, of course, we have that bonus to talk about, right? And this is what's really great about Teton bonus. You know, when we look at the competition, we find that, you know, a lot of you will have to go and ask your clients, you know, do you want a bonus or do you really want that kick butt accumulation? And that's not what we have here with Teton bonus, of course. We have both. We have a bonus and accumulation. Now, yes, we do still have lower caps than on Teton, but we still have really great adjustments here across the board. People definitely love that Teton bonus 14 with that 10% premium bonus. Now let's take a look at a case study here for Teton. Really, really simple. We're just going to look at accumulation and how this account can accumulate for this client. So we're going to purchase Teton 14. We're going to do $1 million in initial premium. Issue age of this client is going to be 60. We're not going to take any withdrawals here. We're going to allocate 50% to the S&P monthly cap and 50% to Atlas annual point-to-point with par. So when you run our illustration system, you have a great packet that comes out. But this page, I believe it's page 7, I find is very, very impactful when showing the power of an accumulation product to a client or prospective client. So here we take a look at this. Remember, we're starting with $100,000. Our annual effective rate is 7.62%. That's really big, right? But then you take a look at the first 10 years of interest credits and you find, wow, you know, 4 of those 10 years were in double-digit interest credits. So the owner age is 60, $100,000 in initial premium. After 10 years, our account value has doubled. It's grown to just over $200,000. Now let's say the client lets this product sit for a little bit longer. After 20 years, this account would have grown to just over $400,000 by the age of 80. Age 90, it will be almost $1 million. And if the client, say, lived to 110, 50 years, that would be about $3 million. And that's really the power of a good, strong accumulation product. Now let's switch gears here and talk about Denali. So Denali is really designed, it was for accumulation, just like Teton, but also an income fixed index annuity. A lot of this is going to sound similar, but there are a lot of differences here as well. So we do have a 7, 10, and 14-year version. Same as Teton, we have a bonus and non-bonus version of Denali. We have tremendous crediting strategies here. Our monthly cap is 3%. S&P annual point to point. Our participation rate is 40%, and Atlas, our participation rate is all the way up to 140%. Now we do have lifetime withdrawals as well as wellness withdrawals, which is of course our ADL benefit. And I'll talk a little bit more about those here in just a minute. But the great part about Denali, and what do our clients love to hear? All of this can be done without a charge. Here are the basics for Denali. Looks pretty similar to Teton. It's pretty much exactly the same. So no minimum issue age on any of these. Denali 7 and bonus 7 can be written all the way up to age 90. Denali 10 and bonus 10 up to 85. And Denali 14 and bonus 14 can be written all the way up to age 80. Minimum premium allowed, again, $10,000. Just like Teton, we do allow additional premium within the first 12 months of the policy. Again, minimum additional premium amount is $2,000, and maximum total premium here, again, is $1 million. But as I said, we do accept larger cases all the time. So here are our current rates for Denali. This is the non-bonus version. Kick butt accumulation, the biggest rates we've got. And one of the things we do at SILAC that I like to point out is we really do have strong fixed rates. I mean, if you look at these across the board, Denali 7, we're at 2.5%. Denali 10, we're at 2.75. And Denali 14, we go all the way up to 3% on that fixed rate. Just like on Teton, we have those 6 crediting strategies tied to the S&P, and 2 that are tied, of course, to our global index, the Barclays Atlas 5, which of course is our custom index that does have that volatility control. So what we have here is just honestly really great adjustments we can afford with Atlas. And one strategy that I did not point out on Teton, but I will point out here with Denali, is that Atlas annual point to point with spread, or what we like to call is the boost. Now, let me explain that a little bit. So with a normal spread, let's say the index goes up 10. Well, you're going to get 10 less the spread. But our budgets with Atlas and the way it works are so large, we actually are going to get a boost. So for example, let's say in a given year, the Atlas index goes up 10 and your client has Denali 14. Well, you're going to get that 10% plus the boost of 1.75%. So now all of a sudden your client ends up with 11.75 interest credit for that year. And that's where we get the boost because it's not a normal spread. I don't want to say negative spread because that tends to confuse people. So that's why we call it a boost. Now we'll talk a little bit about this when we go into Atlas. But also as a reminder, our director of product development, she does some of our Monday morning webinars, and she does do an hour-long Atlas deep dive that really gets into the nitty-gritty of all this stuff. So if you're really interested, even after today, more so of how Atlas works, definitely look out for one of those webinars. And all of our strategies here, like on Teton, are one-year strategies with no fees. So here's Denali bonus. So now, of course, we have that upfront premium bonus to talk about here. They are banded bonus on Denali. So just make sure you pay attention to the age up here. So 0 through 80 on the bonus 7 is going to be 5%, and 81 to 90 is going to be 2.5%. So same exact strategies as what we had on Denali, but of course our adjustments are just a bit lower because we have that upfront premium bonus, but still look really, really great here across the board. Now, with that, I'm sure most of you are wondering, and I get asked this a lot, what's really the magic here with Denali? How can we have the lifetime withdrawal benefit and still have this phenomenal accumulation story? We saw the rates, we saw all that. Well, a lot of income products on the market have two engines. They have the income account and the account value. And those kind of end up working against each other. So what we did with Denali is we aligned everything to have just one engine, the account value. So we put everything in one bucket to drive that account value. And in doing that, we removed any extra benefits and any of those extra unnecessary features that tend to create drag on a product. But here's a key point about Denali. So instead of having a fee, because that's big, we did not want to have a fee. We wanted to do something else. And the reason is that when you add a fee to a product, it's going to drag down all your benefits, right? It drags down that account value. Here's the thing, no matter if someone takes the guaranteed withdrawal benefit or not. So what we said was, we're not going to have that fee. And in place of that fee, what we focused on here with Denali was modifying how our bonus recovery structure works. Now, on most products, this is called a vesting schedule, a premium bonus recovery schedule, or what have you. We call it our bonus recovery. And what our product development team did was really tweaked how that worked. Now, here's the key point about this bonus recovery. It only kicks in if one of two things happen. So either the client leaves early, meaning they terminate during that 7, 10, or 14-year withdrawal charge period, or secondly, if they stay with us, right? But they take out during that 7, 10, or 14-year period an excess withdrawal that would get hit with that withdrawal charge. Now, if they don't do either of those two things, this never applies to them. They pass away, this does not apply to them. They take out free withdrawals, RMDs, nursing home benefits, all of that, it's not going to impact them. This bonus recovery is not going to kick in. Again, it only impacts them if they leave early or take out an excess withdrawal. And that bonus recovery schedule, along with the withdrawal charge schedule, is available to all of you on our Denali series product highlights, and that is on our agent portal. So if you want to check that out and see what those are. Now let's really take a look at the lifetime withdrawal structure. Now, it looks like I have a lot on here. I should probably update this slide, but it's actually really very simple. So however your client allocates their money between those crediting strategies that we talked about, and really however those grow, well, that's how your client's account value grows. And that's how their lifetime income grows. And now the beauty of this super simple structure is there are no restrictions, guys. There's no current roll-up rate, no minimum roll-up rate, no maximum roll-up, term multipliers, no benefit cap, none of that. It is just the account value. It really is that simple. Now we have a 1-year wait to turn on income, and we do have step-ups that can actually happen, which you'll see here in an illustration in just a minute. And again, we are able to do all of this without fees. Now, in addition to all of that, it does get better, right? We also have wellness withdrawals. So this is, of course, an ADL benefit. So if a person cannot perform 2 out of 6 of those activities of daily living, their lifetime withdrawal percent can be increased for a maximum of 5 years. If they are taking out single lifetime income, it's going to be an income doubler. If they are taking out joint, just one of those covered people, just one of the spouses needs to qualify, and it's going to increase their income by 50%. Now, after those 5 years, they just go back to taking those lifetime withdrawals again. Now, another thing that is nice about this is if they've turned on wellness withdrawals, and while the client is receiving those withdrawals, let's say for some reason their account value goes to 0. Well, we will continue to give them those full wellness withdrawals for the full 5 years. So let's take a look at a quick case study here with Denali. Again, as a reminder, this is our proprietary illustration system, really super simple, easy to use. So I definitely encourage all of you to try that out. Really great tool to look through with your clients. So the case study we're just going to look at straight lifetime withdrawals. We're going to purchase Denali 14, $100,000 in initial premium. Issue age of the client is going to be 60. They are going to defer income for 10 years, and they are going to allocate 50% to the S&P monthly point to point and 50% to Atlas annual point to point with that great 140% par rate. Now here we are, our annual effective rate is going to be 8.66%. That's huge, right? We love to be able to show that to our clients. But let's take a look at what that even means. Look at our first 10 years. Our interest credits are huge. We've got 5 years where we're not only in double-digit interest credits, but really high in double-digit interest credits. Year 3, 17%, year 9, 16%. That's huge, right? So we started with $100,000 in initial premium. After those 10 years when we're deferring income, our account value is going to grow to just over $229,000. Now, when we start taking our lifetime withdrawals in year 11, look at this. We're going to lock in that rate. We start taking out that $12,000. Now remember, we have wellness withdrawals here on Denali. So say a client couldn't perform one of those 2 out of 6 activities of daily living, we're going to increase their income for 5 years, and that's going to be up to $25,000. Huge benefit here with Denali. Now let's take a look at year 12. Remember, we're taking out income, $12,000. But hey, we took out income, but our account value grew in year 12 to just over $243,000. And that's where we see the step up happening. So now all of a sudden, we went from taking $12,000 in income and stepped up to 13% because our account value grew. Huge benefit here with Denali. And you can see as you continue down this line, more of those step ups that are happening with Denali as our account value grows. So as a reminder, we started with $100,000. We started taking income in year 11. But hey, let's take a look at in year 30, at 90 years old, this account value is at $379,000. And we've been taking out income, right? Huge benefit of Denali. So that means our total withdrawal benefit is just over $342,000 that we would have taken out in income with this line. And then our total benefit is just over $700,000. This really shows the beauty of Denali, how it's really based on that account value. We're trying to accumulate the account, but also giving your client access to those lifetime withdrawal benefits. Now let's switch gears and talk about our Barclays Atlas Index. So people really ask me and Tim, the other wholesaler, and a lot of people at our company, why did you guys add this on other index? And what I wanted to do is show you how we felt that the Atlas 5 was a good addition and complementary index to the S&P. So what I thought was, let's show them this snapshot of all these companies that are included in the S&P 500. And my point here is these are all companies that we recognize, right? We know, we use. And even more importantly, these are companies your clients will recognize, know, and use. I mean, you've got your Apple, Facebook, Amazon. My husband thinks I single-handedly keep Amazon in business with all the packages that come to our house. But so we know these companies are doing okay because we're seeing it, and your clients are going to recognize that too. And we love the S&P and all of its transparency and its history. But what we asked ourselves is, what is the S&P really doing for us? Well, the S&P is the benchmark of the US economy, right? And the US economy is the world's largest economy. But what does that honestly even mean? Does that mean the US economy represents 80% of the global economy, 60%? Well, I'm here to tell you, it's not even close. the US economy only represents a little less than 24% of global GDP. So all of a sudden it hit us. We are missing out on 76% of what is happening in the rest of the world. And is there a way that we can keep everything that is really great about the S&P, and can we build on that and give you all and your clients access to the rest of the world? Diversification, right? And that is where the Atlas Index comes in. So with the Atlas Index, we get to diversify globally with 11 global equities and bonds. And I do like to point this out. We are still in the US with the large caps covered by the S&P. We've got tech in the NASDAQ. Then we have bonds, right? We have bonds from the US, Europe, and Japan. These are all 5- and 10-year bonds. We're also in, of course, the German stock index, Eurozone, Asia, emerging markets. China's in emerging markets, right? They're growing. Things are happening over there. Now, there is one component that you don't see on here, and that is the cash component. We don't have a cash component on Atlas. So your client's money is always allocated to these components. Now, here is really just a snapshot of all the different places around the world that are represented by Atlas. And it goes back again to being able to see the coverage of Atlas. And instead of only covering that one check mark with the US and 24% of the global market, we are now with Atlas covering closer to 90% of global GDP. So I want to show you all a quick 2-minute video of the different parts of the world that Atlas penetrates in a given day. And I hope the sound works. Sometimes it doesn't. So if not, I'll make sure you all get a link to this video if you want to share it as well. I'm not sure this has been happening, guys. Sorry, it's been cutting off there. But the reason we love that video, and I'll make sure all of you get a link to it, is it really does show how Atlas is able to not only penetrate different parts of the world, but while the US is still sleeping, Atlas has already gotten started. It's already gone to work for you and your clients. So with that, I really want to talk about how does Atlas work? Now, let's walk through how this index actually works. Now, these are the 4 steps that Atlas walks through every single day. So we're going to walk through each one. But the first step is we're going to analyze 11 global equity and bond components and develop our historical risk versus reward profile. So let's take a look at that. So step number 1, and what Atlas does, as I said, it looks at the historical risk versus reward performance of all of the different ways that Atlas can be allocated towards those 11 different components that we talked about earlier. So let's say we put 20% in Nikkei, 5% in emerging markets. So what it does is it analyzes all of those possible combinations and plots them on this chart, which means the blue dots represent the different combinations of those 11 components, where it is showing how much performance, potential gain we would have had versus the volatility versus the risk. And because Atlas has that 5% volatility control mechanism, any combination that has a riskiness, any combination that has a riskiness of over that 5% is going to get cut out. So that's really step 1. Then what we do is we are going to look at this dotted line, and we want to make sure we are on or above this line. So anything that is on or above this line means the potential reward of that combination outweighs the risk. And anything that is below this line means its riskiness is higher than its reward. So any combination that falls below this line gets cut off as well. From that point, what Atlas does is it looks at all of those combinations that are left over, right? And then the formula determines which combination is as close to that 5% line as possible with the highest potential reward. And that combination is what gets locked in based on current information as our optimal allocation between those 11 different components. Now, these next 2 steps is where Atlas becomes very unique. So most custom indexes, they use the risk versus reward method of looking at historical data to determine that optimal allocation. But here's the thing, Atlas takes it 1 step further. It really identifies what is going on today. It looks at where there's momentum, where there is positive trends in the world. And in those areas, Atlas can adjust from that optimal allocation and allocate more to those areas with positive momentum. And the second component is what areas have had tremendous performance recently? We can shift towards that. And Atlas is also able to move away from areas where momentum has really slowed. So here you can kind of see the optimal allocation, the trend is positive or negative, and then the final allocation that we're going to allocate between all of these components. So now we all know that the S&P rebalances quarterly, right? Well, here's the thing about Atlas. It has the ability, as I mentioned, to move to the right place in the world at the right time because it is rebalanced daily. And that really ensures that the index adapts quickly in changing markets. And that we saw really, really big with COVID, right? So S&P, they had to make a decision in first quarter, second quarter of what they were going to do. Well, Atlas, as I said, we're able to rebalance daily, so able to have that optimal allocation, move to the right place in the world at the right time to get the best possible outcome. We have a really great piece that kind of talks about this, how Atlas can move to the right place in the world at the right time. It looks at economic conditions from last year and how Atlas has really performed during COVID. So let's take a look at some historical performance here with Atlas. So we're going to look at Denali 14, and we're going to look at the last 10 years. So we're going to compare the S&P 500 annual point-to-point to the S&P 500 monthly point-to-point with cap, the Atlas annual point-to-point with participation rate, and Atlas annual point-to-point with boost. So year 1, if you're looking at these, comparing these across the board, pretty clear here, right, that Atlas was the winner in year 1. Year 2, the S&P was down, right? But Atlas, again, as I said, is able to move to the right place in the world at the right time. So we ended up here with double-digit interest credits while the US and the S&P was down. We take a look at year 3. We're still in double-digit interest credits here with Atlas. The S&P is coming back up. Year 4, S&P was the clear winner here, right? We had a 20% return here on the S&P monthly point-to-point with cap, but we're still in double-digit interest credits over here with Atlas. Year 5, Atlas is the winner here again. Year 6, the whole world is down, right? We're down across the board. But if you look over here to this Atlas annual point-to-point with boost, you're wondering, well, that has 1.31%. And the reason being, guys, is that that client was allocated to the boost strategy, so they got a positive interest credit here when the rest of the world was down. Year 7, the S&P is the winner here. Year 8, S&P is the winner here again with that double-digit interest credit. Year 9, we're down across the board. Year 10, S&P is the winner here again. And I love showing this because it really, really displays how Atlas can provide an option for diversification for your clients, because you're seeing double-digit positive interest credits with Atlas, but then you're also seeing them here with the S&P. We've got some years in 0, but then positive with Atlas. Really, really shows the power of this index and being able to diversify for your clients. We actually have a new piece that we're just launching on our agent portal that you all will be able to share, because the results are in. We've had Atlas for a year, and we like to say we found the light at the end of 2020. So the first set of interest credits from Barclays Atlas 5 did credit over 9%. And we love this piece because it shows that we aren't just saying we have great credits, we're backing it up, we're being transparent, we're showing you guys that's the first set of interest credits for Atlas. Really sort of just to wrap it up here, you know, due to trends and daily rebalancing, again, I've mentioned this many times, Atlas has the ability to be in the right place in the world at the right time. These are all one-year strategies, no fees. Should have bolded that one because our clients love to hear that, right? We have consistent renewals, which is also very, very important. And we do publish all of our renewals. If you want to know more about the Atlas Index, you can go to indices.barclays/Atlas, or as I mentioned before, our Director of Product Development does do really even more in-depth deep dive about Atlas, and I believe it's in 2 Mondays that she's going to be doing that again. So if you want to know more, make sure you sign up and attend that webinar. Now, last but not least, I just wanted to share some resources that we have developed over the course of the last year to really help all of you grow your business. So we have this sales library, and we've been working on monthly new sales pieces to release for all of you to utilize in your meetings with clients. One piece that's really great that we just came out with in addition to the Atlas Index is we are showing our Teton series, the real interest credits for this year. So this piece, you can look and see what exactly people were getting if they were allocated in these given strategies, which is really cool. Obviously, it's powerful to show this to a client, no fees. We love to see that. We have another piece that we've just come out with, and it's a one-pager that kind of looks at Teton versus Denali, what they have in common, which is a lot, right? But also where their major differences are. And I would say when I'm looking at Teton versus Denali, from my perspective, when I'm talking to people, Teton, of course, has that 30% cumulative withdrawal benefit. That's huge. can be very liquid, and Denali has, of course, the lifetime withdrawal benefit. And last but not least, we came up with this annual review packet that you all can go on, utilize. Really, really great resource for you to utilize with your clients on an annual basis. Keep track of your notes as well for that client. And that is all I have for all of you this morning. I know that was a lot of information. I'm sure there'll be more questions that come up later. So here is my contact information. That's my direct email address, my direct line. And also, if you can't ever get in touch with me, you can email sales@silacinsurance.com or make sure to call our sales line, and we can help out with any questions or walk you through how to run illustrations, etc.
All right, Danielle. Hey, thanks so much for your time. Really appreciate it. It's a very good webinar. I had some questions that came in here. I wanted to address those. First question on the Denali. When can income be turned on that product?
There's a 1 year wait, so it can be turned on in year 2 and at age 50. The earliest it can be is age 50, and then you have to defer income for 1 year.
Okay, perfect. And then it can be turned off at any point in time as well?
Yeah, you can start and stop, which is another great feature of the Denali line. So I actually have another set of Denali case studies that we stop income, and then we let that account accumulate again more, and then we turn income back on.
Okay, very good. How about state availability expansion? Had questions about Idaho and Pennsylvania specifically.
We are working through those. Definitely keep checking back. I know that those are in the docket, and product development just told us yesterday we're really working to get those done, but not available as of yet.
Okay.
And you can find our total, our total product availability grid is on the agent portal. It's on the home screen, so you can click that at any time. We update it whenever something is new.
Very good. Another question on can the Atlas be, like if somebody had an older Teton, for example, and they didn't have the Atlas 5 index on there, can they add that on after?
Yes, they absolutely can. Yep, we get that question a lot. So of course, they're all 1 year strategies. At that 1 year, then they can add, or they could reallocate to Atlas however they want.
Very good. All right. Well, I think that addresses all the questions. Couple things here real quick as we close things out. So if you hopped in late on the webinar, I know we had some folks come in a little bit later. This was recorded, so I'll send that recorded version out to everybody here this afternoon. In addition, contracting is done through a link that we'll send out to you. So if you need that, just let us know. Case design. If you're looking for some help with the case or prospect that you're working with, give us a call. We're more than happy to put together some numbers for you, some illustrations, so you can obviously take a look at that with your client. So certainly give us a call here at Western Marketing. Our number is 800-852-7152. You can talk to anybody on the life and annuity side here. In addition to that, keep an eye out for that webinar, for that email this afternoon. We'll kind of go over what we talked about here today with some more verbiage and some different, PDFs that I will attach to that email. So I definitely appreciate everybody's time here and taking time out of your busy schedules to hop on this call. Danielle, thanks so much. Appreciate you as always for putting together this deal for us. And looking forward to helping everybody out, but look forward to your calls as you think of them. But definitely thanks so much, and have a great rest of your Wednesday.
Thanks, guys. Have a great week.
Take care.